Right now, it seems really frustrating to find trends because when we look at the S&P, when we take a look at the NASDAQ, we take a look at the Dow and the Russell, these broader averages, we all know they're chop. Bullish chop, but chop. And it can be frustrating to try to take advantage of a market that doesn't have the fluidity and continuation that trends tend to give us. The way to grow an account is through trends, right? And they're just not in the indices right now. However, the next thing that we can do is sort of look at where there's a tension, but maybe not symbols that are heavily weighted in the broader averages. And that's going to lead us to a few symbols that are going to be worth keeping an eye on. I'm going to give you some sector ETFs, and we're going to break some of these down with the unique process that we use in the Sector Secrets Mastery with the tools that we use. And you're going to find setups and symbols that that are not on your list right now. So I'm going to grab a couple of them. So we have the Social Sentiment ETF, the IBD 50 ETF. This is the Food and Beverage ETF. And I'm also going to take you on over to, let's take a look at CRUZ. This is some airlines, some cruise lines, some hotels, and again, not as tethered, although I'd say this one is probably most tethered to the Dow, where I'm looking at right now, which does look actually more bullish than the S&P and the NASDAQ, so I don't mind that as much. Right? You'll find there's going to be also some strength in financials, industrials, and transport. So again, if you're looking to whittle down to where the trends are, let's take a look at maybe 4 places that you're not looking right now, but should be. Let's start off with Buzz. And what I'm going to do is take everyone over to the multi-charts. This is sort of the secret sauce of the Sector Secrets Mastery, which is let's look at relative performance. All right. Our trading results are only going to be as good as the symbols on our watch list. So let's start with Buzz. Buzz is the Van Eck Social Sentiment. Social sentiment is going to be something we're going to continue to talk about likely for the next few months, because what we're lacking in clarity on the broader averages, there are a number of symbols here that are in this Social Sentiment ETF that are absolutely worth keeping on the radar. Hood, Meta. Now, Meta is also in the NASDAQ, right? Meta is also in the S&P. Meta is also in the XLC. There's a lot of places Meta is. So this is not social sentiment alone, but this is the magnificent plus social sentiment. Definitely worth keeping an eye on. There's 3 names right here. PLTR has been on the radar for a lot of folks, and as long as it remains on this list, it's going to have eyes on it. Same goes with Hood, right? What are we going to avoid? I would steer clear of things that have red candles. Really simple. Unless you want to be a bear, unless you want to be buying puts on days that are moving higher into resistance. If you want to be bullish, those are the names to keep an eye on in Buzz. The other one's FFTY. For those of you unfamiliar with the FFTY, this is the IBD 50 Innovator list. Again, attention because of its inclusion on a list curated by Investors Business Daily. What is not to like here? Almost everything here looks really great. What I would say is you want to keep, here's PLTR again, HIMS, Root, Docs. Again, check the liquidity, but a lot of these names are going to have overlap in a few places. SFM is one of them. We know that we want to stick with trends, and these are trends that are not only price and participation, but as long as they're included in this IBD 50, they're guaranteed a certain amount of attention. Attention is a part of that continuation of an uptrend. So anything that has a green trend, right, keep an eye on it. Then I'm going to take you on over to that peanut butter and jelly, PPJ, food and beverage ETF. And this conversation was interesting because one of our members in the Sector Secrets Mastery asked me about Dash after earnings. And I said, yeah, let's wait for the melee of earnings to happen. And then we'll come back and look if this trend is still intact. And we can take advantage of the movement higher. Dash, UNFI, CART, here's that SFM again. That's a lot of attention, isn't it? In 2 very different places. So this is what we want to do. Avoid the things that are moving lower with red candles. Avoid those, right? Avoid things that are immediately in front of earnings, like Dash. Let the earnings happen, let the dust settle, and then we'll look for the opportunity. Look how quickly we're also able to put together a watch list when we've curated things that belong together because of the attention they have based on the inclusion in a sector ETF. Right? This guarantees a certain amount of attention. The last one is cruise. Now, cruise is going to benefit from some of what's happening in the Dow, industrials, and transports. Right? And you'll see what the leaders are right off the bat. Right there. 2 hotels and a cruise line. More hotels. Right? Keep an eye on those 4. If there's going to be continuation, let's see what happens after earnings and MAR, but we're looking for continuation of trends. Think about what made 2020 so great. What made it so great? So many things were moving up in trends. While we may not have that broader participation at the broader average level, there are plenty of things that are moving higher in places that have sort of an alternative reason for attention. So these are things that you should be looking at, but maybe not the common things, right? And that's the process, gang. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.